Time for Collective Two's Top Trader Radio, where each week we bring you in-depth conversations and insights from standout strategy managers featured on the C2 platform. With your host, Charlie Wright.
Well, actually, Charlie's off sick today here, so I'm going to sit in for him. I'm Paul Roberts. I'm usually the producer on the show here, and we're proud to have you with us here in Collective 2, the world's largest automation trade-sharing marketplace. And this is Top Trader Radio. I will be talking today with a gentleman who has a very interesting strategy that I encourage you all to take a look at. It's called Correlation Factor, and his name is James Leigh. Welcome, James.
Oh, thank you, Paul. Thanks for having me.
So tell us a bit about you, your background. How did you get started in trading?
Well, I have a bachelor's degree in computer science and minor mathematics from Carleton University in Ottawa. I've been running my own software consulting business for the last 10 years, specializing in alternative databases. And I got into trading after I've had some success with the Forex market and encouraged me to take control of my own investments.
Ah, there you go. All right. So, and what was alternative data? Is that what you said?
Alternative databases. Yeah. So these are like NoSQL databases, including RDF and text mining.
Okay.
Usage.
I have no idea what that is. Is that something that they use in financial modeling, or is this what is it used for?
It's used a lot in both publishing and the medical industries, including a lot of research.
Okay.
Analyzing big data primarily.
So what made you, or how did you make the migration into coming up with your own strategy? What motivated you to do that?
Well, I live in Toronto, which is in Canada, and a lot of my business comes from the U.S. So I am forced into converting between the Canadian loonie and the American greenback.
And that is the Canadian currency. That sounds a little loony to us down here, but it is called the loonie. All right.
That's right, the $2. So it's so being forced into the Forex, I really wanted to make sure I was doing it right. And that got me deep into Forex trading. Even though I was just trading one pair, I ended up getting hooked.
Okay. And describe in general terms what you discovered and over what period of time. What is your trading strategy and how does it work?
Well, my strategy, Correlation Factor, employs a rotational discipline with focused exposure to about 5 sectors, experiencing the most favorable relative strength and stability, while avoiding exposure to those under prolonged duress.
And I was going to say, over what period of time did you come up with this and fine-tune it here?
I started researching the strategy in 2014. I was inspired after reading Keith Fisher's book, Building Reliable Trading Systems.
Oh, yeah,
and his description of tendency analysis and finding the path of least resistance.
And so for you, the path of least resistance was just to do it yourself.
Yeah.
All right. And so you've been doing this for a couple of years. When did you go up on the Collective 2 platform and start putting this out there and having people track it and watch it here?
I started publishing about 2 years ago.
Okay. And over that period of time, we can't talk about the specific returns and that, but obviously you've done well there. Were you surprised by the results? Is it what you anticipated?
I do extensive back testing, and to be honest, I wasn't too surprised with the results. I knew it was a great strategy when I posted it. I've tweaked it and adjusted a lot of the parameters over that time. To improve the results. And in the first year, I held back a little on the sizing of the positions, just to make sure everything was performing as I expected it would. And now that it's been out there for 2 years, it's working really well, and I'm really pleased with how well it's been running.
Well, everybody wishes they could be you. Everybody wishes they could come up with a strategy. Obviously, they can't. So they go to platforms like Collective 2 where they read extensively and subscribe to newsletters, whatever the secret sauce is to try and get an edge on the market here. What do you think the major misconceptions are that many people have about trading and investing? What don't they get?
Probably a lot of people mistakenly assume that if a strategy worked in the past or with historic data, then it'll work in the future. It's very easy to get backtesting wrong, and the future is so different. It's always changing. There's a very good reason the SEC requires everyone to say at the bottom, a fund's past performance doesn't necessarily predict future results.
Yeah.
And I don't think enough people heed those words.
And yet, that's very interesting. You're the first person that's ever said that. We've been doing this show for a long time, and we do some other financial shows. And it's all about looking at back data. That's the only data you have to analyze. But you're saying it's easy to interpret that wrong.
It is, yeah. It's easy to fudge the stats even on a platform like C2. You see some system there hold trades longer than they should, just to try to improve their stats, which leads to misconceptions. So
you're trying to what should we say, make it look better than it is.
Yeah.
All right. Well, then,
some people need to be aware of.
So what would you say is the best advice you've received, read, heard about regarding trading? If that's the misconception, then what's the best advice you can pass along?
Well, that would be to be choosy about potential opportunities.
Okay.
As a trader, you have to learn to let most opportunities pass you by. You can't do everything. For example, if I don't get the price I wanted, I have to accept that and wait for another opportunity to come to me.
Somebody once told me the deal of a lifetime comes along every 90 days. It's hard to accept that, though, because you think, this is it. I got to go. It's time to move. I'm all in, or, this is the moment, right?
Mm-hmm. Abraham Lincoln once said, I will prepare, and someday my chance will come.
Someday. And then the key is to know when. So does your strategy, I'm assuming that it gives you some signals. It tells you the day has arrived. The moment is now.
It's fully technical. It's all done out, and there's no opinion that goes into the strategy. It's all laid out with numbers.
Okay.
It's all very technical.
Do you think that's going to become more and more the future of trading? People are talking about, is it just one big algorithm? Now, I understand it's not easy to come up with an algorithm, and what data do you look at and over what period of time? And as you said, how do you analyze past data? This isn't as easy as it sounds, but it used to be more of an art. And do you think it's becoming more of a science?
Oh, yeah. The automated trading is, and machine trading is really becoming very, very popular. And it's picked up not just in the institutional environment, but also in retail, where people are developing a much more mechanical approach to trading.
And as we move into artificial intelligence and better machine learning, is this going to make our strategies that much better?
I think so. I mean, I myself do a lot of research in machine learning to try to improve my strategies, and I think that's going to become much more mainstream as we continue.
Does the machine adapt the strategy? I mean, it conceivably at some point in time. Right now, it takes a human to kind of spot the patterns and set up the parameters, right? But at some point, is the machine going to improve itself? There's always levels of meta that you can add onto a strategy. You want to make sure it doesn't get too complicated, or else it'll become too abstract and not grounded in reality anymore. Right.
So it's important to make sure that if you do have a machine guiding the strategy, that you have a human there to guide it in the right direction. Okay, good, because that's what I was trying to get at here. I mean, at some point, are we just going to turn it all over and say go? Or does it still take some interpretation? It still takes somebody saying, wait a second, now we're getting away from reality. We're getting away from, there's some intuition, there's some common sense. There's somebody has to guide this and watch it and run the machine. Yeah, I like to think of it that the computer can help guide me to the right direction, and take a lot of the searching off my plate. But you still have to make the decision. Yeah. Okay. All right. Well, we're going to make a decision, take a break here, and just do a quick shout out to our sponsor here. So
stick around. Fascinating stuff here. I want to learn more about your ideas and advice that you'd give others as they look to enter this strange new world of automated trading here. So stick around. We'll be right back after word from our sponsor. And just quickly, we want to say that Top Trader Radio is brought to you by Collective 2, the world's largest automated trade sharing marketplace. Great traders like our guest today ask Collective 2 to track their brokerage results in real time. Then other investors can subscribe to these trades and automatically follow them in their own brokerage account. Pretty simple. You can register for free at Collective 2. That's collective and the number 2.com. And you too can browse hundreds of trading strategies, including full track records and detailed statistics. See how they're doing in real time. The future is now. Experience the power of cloud-based trade syncing technology and peer-to-peer trading today at collective2.com. All right, we're back with James Leigh, who's come up with this strategy correlation factor. You can find it on Collective 2. Is this your only strategy, or have you come up with other ones as well?
This is my only strategy.
This is the one you're
right
focusing. Now. Okay, because sometimes people they're testing 2 or 3 different approaches or ideas here. And give us again, for those that just tuned in late, just a quick summary. What is the strategy? What does it do? What does it look at?
The correlation factor is a sector rotation strategy. It picks about 5 sectors that have favorable relative strength and stability. Invest in those. It's a long only in U.S. equity. Okay.
And do you set, is there a limitation to the sectors it looks at, or is it just looking for the best results over, I don't know, all sectors, any sector?
It's limited to U.S. equities, and it avoids energy and minerals, as those are very dependent on the commodities.
Okay, good. Okay. All right. Well, having stumbled into this area and tested it now for a couple of years and gotten the results that everybody can see up on Collective 2 here, what advice would you give to traders or self-directed investors? I guess that's what we're really talking about here, to improve their results. Is it just look for the best strategy? Is it be patient? You know, we've heard a variety of answers to this question over time. What would you tell self-directed investors to do?
Well, my advice to investors is to take it slow. Think long term. You know, if you're not quite sure, wait an extra day, week, or month and see how things develop. A year from now, you're not going to remember every missed opportunity, but the experience you gain through deep understanding could stick with you.
Okay. Makes sense to me. You know, don't jump in until you're ready here. And so you don't believe the he who hesitates is lost philosophy here. It's not about immediacy or quickness. It's about being certain and sure and comfortable with what you're doing. Take your time. All right. Well, why do you think then that this strategy, obviously you believe in this strategy, you designed it, you've tweaked it over time. Why do you think it's been able to outperform the market during your time with C2 platform? Did you just discover some secret sauce? Is it the right timing for the right strategy? What is it that allows this strategy over the past couple of years that you've been on the platform to outperform the market?
Well, everyone wants to invest in something that will do well long term. But before an investment can become a good long-term trend, it first has to become a good short-term trend. So positions here are reevaluated continuously to keep losses to a minimum and take advantage of developing trends. So this allows the strategy to get in early on new trends and get out when those trends don't show follow through. Okay. So is it essentially a trend following strategy then? Is that what you're kind of looking for? Trying to find and track trends here and decide. How do you decide when to get out? That's the problem. My late father used to say, I can always spot a trend. I just never know when to quit. The strategy compares the sectors relative to one another. So if it sees that other sectors or trends are continuing with follow through, then it will rotate out of trends that are showing staleness and rotate into ones that are trending.
Okay. And how often does it make these determinations? Does it look at it daily? Does it look at it hourly? Does it look at it weekly, monthly? I mean, how often is it adjusting?
It's looks at the trend daily, so it makes daily adjustments.
Okay.
On what sectors are trending at this moment.
And so, are you? You said it's a long looking strategy, though. So, Are you moving? How quickly are you moving in and out of things, or how long do you stay with something before you decide to move?
Well, the average hold for a trade is, according to the stats, is 40 days.
Okay.
But the trends that work, are held for 9 months, and ones that don't are, held for a week.
Okay. All right. Well, that gives us some idea. All right. Well, let's talk about how do you see your strategy matching your personality? There's another insightful question. Why is this strategy the right one for you? How does this reflect who you are?
This strategy doesn't rush into a trend. It'll wait for a good buying opportunity or selling opportunity. It has rules to wait if an asset is overbought or oversold before placing an order. So this goes back to what we're talking about choosing the right opportunity and being ready when it comes.
I know you're going to laugh when I say this, but this is a typical American question. Does that match sort of the Canadian personality here? It's not too, it doesn't jump immediately. It's sort of a thoughtful, longer term approach. That seems to be the difference in America. Americans just want to get in and get out. We're day traders, boom, I want to grab it in 20 seconds and get in there.
Yeah, I guess so. That's sort of my personality, and I think that's really reflected in this strategy, where it waits for the right opportunity, and if there's a knee-jerk reaction that the market's doing, it'll wait and see what happens.
So it's not impulsive. It's not
impulsive. Yeah.
All right. Well, tell us about correlation among industries and sectors, and why you use it as a guide and indicator, really, in trading.
Oh, that's a great question. When analyzing the correlation of sectors, I noticed that by keeping the real-time correlation of the invested assets low, I could decrease the volatility of the overall portfolio. Though this comes at a cost of the potential raw return, but once you adjust for risk, the performance is improved.
And was there any, I'm just curious to know, when you were looking at this and doing what you just described, was there an aha moment when you said, I got something here?
Yeah, one unexpected surprise I found when studying the correlation was that it was not uncommon for sectors to find a local top after the correlation to its peers became unusually high.
Okay.
So correlation factors take advantage of this, and that's what sets the strategy apart from other sector rotation strategies. This strategy has a tendency to reduce its holdings when sectors get too hot.
Interesting. Okay. And that took you by surprise a little bit. It wasn't necessarily what you thought what the outcome was going to be?
It was not something I was searching for, but it's something I was really glad to find when I found it.
Well, people are going to be glad when they find your strategy. How do they find you on the C2 platform?
They can search for correlation factor after logging into C2.
And I know this sounds silly, but let's spell correlation. Everybody's going to come up with a different way to do that here.
Sure, it's CORRELATION.
Okay, correlation
factor.
Factor. Okay.
They can also visit my website at probabilitytrading.net.
Okay, and do you put out other information about this? Is it just a strategy? Do you have a newsletter? Are there other sorts of things they can subscribe to or learn about you and what you're doing?
Not at this time, but I'm hoping to expand the website in the future.
Okay. All right. Once again, it's Correlation Factor. You've been on the site for how long? For a couple of years now here? So all of that.
2 years.
2 years. So everybody can go back and take a look at how it's performed over that period of time. It's not guesswork. You can see what it's onto here. Final words for our listeners. Final thoughts, final insights, final warnings, final bits of wisdom. What would you pass along?
Correlation factor is for investors who want to be a part of the ebb and flow of the market and want to take advantage of market rotation trends for a chance to outperform the broader market.
And who would it not work for? What types of people is this not built for? obviously day traders or people who want to get in and out quickly here.
That's right. It can be traded with just a 15,000 capital. It can be traded in an IRA account. It's designed to balance risk and reward. It's for people. I design it for my personal core portfolio holding. And if that's what you're looking for too, please give it a look. Okay,
correlation factor. All right, well, thank you so much for talking with us. I'm always fascinated to meet people like you guys who come up with an idea and start to explore it and turn it into a full-blown, automated strategy here, and then have the patience to test it, not just to back test it, but to put it out there in the public and let people watch it and see how it performs. And it's amazing. People should check it out here. Correlation factor. Thank you so much. James Leigh, right here on Collective 2 Top Trader Radio. Collective 2's Top Trader Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, and legal professionals prior to any investing.